The meeting is now live.
Good evening, everybody. I'd like to welcome members and officers to this Finance, Audit and Risk Committee. Please note the meeting is being streamed live on the Council's YouTube channel. Before the meeting starts, I'd like to invite the committee member and scrutiny officer to confirm that the officers joining remotely can hear and be heard, and to explain how proceedings will work. Matthew, cheers.
Thank you, Chair. Good evening. So I'm just going to check if Mark Chalkley can hear. If you can unmute yourself, please.
Yep, I can hear you loud and clear.
Thank you. And Ian Cooper.
Yes, I can hear you.
Thank you. I'll just as well inform everybody that we have Councillor Ian Albert present as Exec Member for Finance and IT, and the leader of the Council, Elizabeth Dennis Harburg. When requested a vote, voting will be via the yes, no and abstain buttons on your microphone unit. Details of how members voted will be shown on the screens around the room, and the result will be visible on the YouTube stream. In the event of a tied vote, the chair will have the casting vote. Members and officers are required to wear masks when standing or moving around the room or the building, and masks can be removed while seated. Exit and entry to the room and the building will be guided by marshals. Are there any questions before we start? No, thank you. Over to you, Chair.
Thank you very much, Matthew, and welcome from the chair to Ian Albert and Elizabeth Dennis Harburg. Nice to have you both here. We have apologies for absence. Councillor Adam Ruggiero Chaka and Councillor Nigel Mason is subbing for him, so welcome, Nigel. Item 2, minutes. We have slight difficulty with this because I think there's only one person here who was at the last meeting. But I will, from the chair, propose that we take as read and approve as a true record the minutes of the meeting of the committee held on the 8th of March 2021. It would be nice if Sam said yes, because he was the only other one here.
Yes.
Thank you very much. Much obliged. Do we need to do a formal vote on that or not?
Yes, please, Chair.
Okay, so can you please vote that we take as read and approve the minutes? And that is indeed carried. There's a surprise. Right, I will sign those shortly. Notification of any other business, there is none. I have to do some standard announcements, which I'll rattle through. In accordance with council policy, this meeting is being audio recorded as well as filmed. The audio recordings will be available to view on ModGov, and the film recording via the NHDC YouTube channel. Declarations of interest. Members are reminded to make declarations of interest before an item. The detailed reminder about this and speaking rights is set out under Chair's announcements on the agenda. There is no public participation, so we go straight to item 6, which is the SIAS Annual Assurance Statement and Annual Report. I'm pleased to welcome Mark Chalkley, who is the Client Audit Manager for SIAS. So over to you, Mark.
Thank you, Chair. I'm aware that we've got a couple of new members on the committee today, so I thought just before I launch into the annual report and annual assurance opinion, I'll just give you a little bit of background about SIAS and internal audit in general, just to make sure that we can understand what our role is. So essentially, the role of internal audit is to provide independent assurance that an organisation's risk management, governance and internal control processes are operating effectively. What that means for us is every year we set a risk-based annual plan, and we achieve that through consultation with senior management, taking into account the risks, council objectives, projects, priorities facing each service area. Through our planned engagements, as SIAS, we aim to add value and improve the organisation's risk management, governance and internal control processes. We do this through raising findings and offering recommendations to address any weaknesses or issues that we've identified. In terms of SIAS ourselves, we're a shared partnership between 8 local authorities, so 7 district and borough partners within Hertfordshire and Hertfordshire County Council. As a team, we have a head of SIAS, 3 client audit managers, 6 senior auditors, 6 auditors and a trainee auditor. We operate a matrix structure, which means other than myself as your client audit manager, any one of the team could work on projects across the partnership. SIAS has a board made up of a nominated officer from each of our partners, which is usually the Section 151 officer, and for North Harts that's Ian Cooper, Service Director of Resources. And currently North Harts commissions 270 audit days from SIAS, and these days are used to conduct assurance audits, which provide the opinions that lead us to our annual opinion that I'll lead into now. So the purpose of this first report is for members to note the annual assurance opinions that are in there, note the results of our self-assessment as required by the public sector internal audit standards, accept the SIAS audit charter for 2021-22, and to seek management assurance that the scope and resources for internal audit were not subject to any inappropriate limitations. I don't know whether you want to do that first, Chair, or...
Yeah, we can do that. That's not a problem. We're just receiving this report, and you've already prompted me on the any inappropriate limitations prompt. So I don't know that we have to vote on that. We're just accepting this report, surely. I'm advised. Okay, so do you want to continue, Mark?
Yep, certainly. So as we move through the report, I'm going to refer to paragraph numbers, but the purpose of this report is to provide the committee with the annual assurance opinion based on the work that was completed in the 2020-21 year. The opinion is split into a financial opinion and non-financial opinion. Two of the report provides the annual opinions and the context in which we drew these opinions. So the first paragraph that I'll draw your attention to is paragraph 2.11. SIAS can confirm that in our view, our independence was not threatened and we were not subject to any inappropriate limitations of scope or resources in 2021. I'm sure Ian would confirm that from a management side, officer side.
Ian, do you want to come in on that?
Yes, thank you, Chair. Yes, I'm happy to confirm that we have not limited the scope of the audit work. In fact, we've tried to encourage SIAS to look in all places to try and support us as best they can.
Okay, thanks. I think we're content that this was an open and fair approach. Thank you.
And the next paragraph I'll draw your attention to is 2.12, and this provides a satisfactory opinion on both the financial and non-financial systems. For the committee's benefit, this is consistent with previous years, and what this means is, as it states in the report, it represents a largely effective control environment and the risks are managed appropriately. Section 3 provides an overview of the Council's internal audit activity in 2021 the work that was completed that informed our opinion. It's important to note that the recommendations have remained relatively consistent year on year, and this demonstrates to me that the audit projects we've undertaken were suitable for the audit plan. The tables at 3.7 provide details of the 2021 audit outcomes, and also in brackets is the 2019-20 figures as well. Paragraph 3.6, we note that there were 5 audits that were classified as not assessed, and this means that we just didn't provide an opinion on those pieces of work. And these include things like grant certifications, the charitable trust audits that we undertake, where the outcome was more confirmation of compliance rather than an assurance opinion. However, we have on the non-financial systems. 3.7 describes the only limited assurance report that was issued in 2021. although this does actually relate to a 2019-20 project, but this was not completed until after the opinion for 19-20 was provided. Therefore, we've considered it in this year's opinion. Whilst the issues identified within that audit were significant, these by themselves are insufficient to reduce the overall assurance level for non-financial systems. Section 4 details the performance of SIAS against our key performance indicators for 2021. The table at paragraph 4.1 demonstrates that all KPIs were met for 2021, and that's despite the challenges that were faced not only by the council but by ourselves as well in terms of service delivery during that year. Personally, I think this is a fantastic performance, and I'd just like to thank the engagement of officers at all levels for the support that SIAS received last year to complete all projects to draft report by the end of the year. Section 5 of the report refers to the audit charter, and this can be found in full at Appendix D. The audit charter is standard across all our clients and describes the scope, authority and responsibility of internal audit at our clients. Appendix A outlines all the audit projects that we undertook last year, the assurance opinions and the recommendations made. Then I'm going to skip down to Appendix C, and this provides the committee with the two areas of non-conformance with the public sector internal audit standards. These are the professional standards with which SIAS must comply with. We've undertaken a self-assessment and consider ourselves to be generally conforming, which is the highest rating available. That's the end of that report from me, so I'm happy to take any questions.
Any comments or questions from anyone, or shall we move on? No, I'm not seeing any hands raised, so I think we can continue. Mark, are you moving into the audit charter?
I wasn't planning to talk through the audit charter. That was more to be accepted by the committee. Okay. The next report for me is the progress report.
Okay, thanks very much. Do you want to move on to that then? Internal audit progress report?
Yep, happy to. So the progress report, this report's designed to provide the committee with an update of the work that SIAS undertakes each quarter. It's intended to give the committee some assurance that we're on track to deliver the plan by the end of the year, and to also provide the committee with the outcomes of the audits when they've been finalised. New members to the committee may have already received 1 or 2 emails from me. The agreement we have at North Herts is that all audit committee members will receive all final reports once they've been approved by management. So moving into the report, paragraph 2.2, the table at this paragraph details all the final reports that have been issued since the last committee reports were submitted. All these reports relate to work in 2021. We haven't yet issued any final reports for projects in the 2021-22 audit plan, but we have got a couple of draft reports. At 2.4, members should note that all projects from April 2021, our assurance definitions have changed. This is to bring us in line with the SIPFA recommended assurance levels. The main change to be aware of is a move from a good rating, that is now called substantial, and satisfactory is now reasonable. The definitions themselves have changed slightly, but not materially. Paragraph 2.10, no high priority recommendations were made as a result of the completed projects reported at 2.2. However, there were 2 historical recommendations that were followed up as part of this committee process, both of which are now deemed by management to be fully implemented and will therefore be removed from the progress report for the next committee. Details of these can be found at Appendix B. At 2.12, There are 3 amendments to make the committee aware of to the audit plan for this year. Firstly, we returned 7.5 days to contingency as we overestimated the number of days we would require to complete work for 2021 when we set the plan. Subsequently, 4 of those days have been reallocated to 2 new grants that require internal audit sign-off to certify that they've been used in accordance with grant conditions. So this leaves 3.5 days in contingency. At paragraph 2.16, this table provides members with the performance to date, and I can provide you with the updated data for billable days and projects to draft report, as this report was written about 2 weeks ago. Billable days, we've currently delivered 66 days, which is 25%. Excuse me. And we've now issued 2 reports to draft, which is 7%. Excuse me 1 second, I just need to clear my throat. The next part of this report I'm going to draw your attention to is Appendix C, and this is the timetable that details when audits are expected to start, as agreed with management during audit planning. The projects for quarters 3 and 4 have been provisionally agreed. As members of the committee who were here in March may remember that the intention is to confirm the plan for quarters 3 and 4 at the September committee following a further round of interim planning meetings with all service directors. You'll also note that all quarter 2 audits have now been allocated and assigned to auditors, and these will start getting underway over the next couple of weeks. That's it for my update today, so I'm happy to take any questions.
Thanks, Mark. Are there any comments or questions from members? Councillor Hone, Terry.
Yeah, thank you, Chairman. And thank you, Mark, for that. Yeah, splendid. I mean, what I'm seeing here is that it seems our finance department is doing a good job, and those around them as well. And that's pleasing to hear. Certainly that's always been the case in the past. It continues, which is, as I say, from the residents' perspective, it goes to show we've got good controls in place as far as what the team there are doing. And so I'm pleased with the report that's in front of us. In fact, it's very positive, and nothing in there which says we're doing anything drastically wrong at all. So good report, and well done to the officers at the council.
Thanks very much, Terry. Certainly with your years of experience in finance, that's praise indeed, and I'd echo that that sentiment. Any other comments? In which case, I'd just like to say thank you very much to Mark for a very comprehensive report, and as you can see, it's been very well received.
Thank you.
Okay, I'm going to move on to agenda item 8, which is the annual report, and that's coming from Ian Cooper, I think.
Thank you, Chair. I just wanted to confirm with Matthew if you need to formally confirm items 6 and 7 before we move on. Then we do the vote on either of them.
Okay, I'm sorry, I thought we were just receiving those as information, but if we need to have a vote on that, we can do. We can vote to receive those reports. Matthew, can you take us through that? Thank you very much. Unsurprisingly, that's a unanimous vote. So we will indeed now move on to the Finance Audit and Risk Committee annual report, and Ian Cooper. Thank you.
Thank you, Chair. I move you straight on to the appendix to the report, which is the review of what happened last year at the Finance Audit and Risk Committee. The benefit of this report, whilst it's intended to go to full council for them to note what this committee is doing and to make sure they're an effective committee, it actually provides quite a nice overview about what is coming up for this year, whilst it reflects back on last year. So if I can start with the section on page 66 around effectiveness, that references the review by SIAS in relation to the effectiveness of this committee. You are due to get that report to this committee next time. So in July, we'll bring that report to you. Hopefully we're finished by then. But just to sort of reflect back on the report from last year and the actions in relation to that, and there's 4 bullet points on the bottom of that page. In relation to an independent member of the committee, still trying to work that through, need to get into the constitution to allow it, and then obviously appoint someone once that's in place. So continuing to progress that, and it was delayed last year due to the impacts of COVID-19. In relation to the second bullet point on membership, I think the membership this time is very good in terms of there's very little overlap, which I know is difficult to achieve given the number of councillors, the number of committees we have in place. So it's really positive that we have managed to sort of get to that place for this year. In relation to the third bullet point, and that's sort of just my basic encouragement for you to ask to receive any reports that you think are relevant. I would always caveat that against kind of making sure we don't overlap with every overview and scrutiny committee. But if there are elements of finance, audit, risk, control that you'd like an additional report on during the year, there is always an item at the end of the agenda of each meeting to ask for sort of forward planning and additional items. So I would always encourage that, whatever it takes, I suppose, to give the committee assurance that all those things are in place and functioning well. And the last bullet point on that page is in relation to training. Following this meeting, I will send to all members of the committee and substitutes what I call a kind of a training matrix. It's a very short list of topic areas for this committee, and I'd just like to complete it as soon as you can with an assessment about your skills in relation to each of those topics. I will then use that to make sure that we get some training in place as early as we can in the year to get you all up to speed as best I can. So moving on to page 68 and 69, the table there just goes through what reports have been received by the committee during the year, and you'll see that they're kind of quite wide ranging and varied. And then also in the bottom of page 69 is a summary of what you've got to look forward to for the coming year. So each of those bullet points is a kind of topic area that you receive during the year. So as a committee, you're responsible for, first of all, reviewing, but then approving the annual governance statement. And that has to be reviewed and then approved before the statement of accounts is signed off each year. So that will come to you as a draft, I think, next time. And then when we do come to signing off the statement of accounts for the year, that will come to you again as a final version. And that brings me nicely on to the next point around external audit. Ernst & Young are our external auditors, and they review our financial statements each year to make sure they conform to the required standards. We have been informed very recently that the audit of this year's accounts will not now take place until November, which is a bit disappointing. We had expected it to be in July, but the external audit market is having huge issues, both COVID related and non-COVID related, into resourcing the audits of all the local authorities and NHS bodies they have to do each year. So that kind of explains the delay for that. I'm sure in due course, Ernst & Young presents the reasons for that delay in more detail, but that does mean that the approval of those accounts will not now be at the next meeting of the committee, will either be in December or January, depending on when that audit is completed. And then below that, I've got the statement of accounts. What we will do is we will be publishing the statement of accounts as a draft version very soon. Whilst as a committee you don't see the draft version of the accounts, you approve the final version. What I always do is I send an email rounds to committee members to let you know it's on the website. I would always encourage you to come back with any questions, queries or comments on the draft accounts, so that when we do come to approve the final version, you're not just relying on Ernst & Young's view of the world. You've also made your own, you can form your own views as well and ask any questions you've got about it. And as we'll come on to today, the next two are risk management and the quarterly financial monitoring reports. You'll see both of those today, so I'll go through those in more detail when we get to those. You've already seen SIAS reports. Moving on to the top of page 70. And you will also receive reports from the Shared Anti-Fraud Service in relation to our approach to fraud. And you'll see that at the next meeting, Nick Jennings will bring that report to us, and that will sort of go over the fraud work that's happened during last year and give you sort of an annual review of that. And then finally, as a committee, you also regularly look at the budget process for the following year. That will start with the medium-term financial strategy, which will be a report you'll get in September, and then work its way all the way through to January with the final version of the budget for next year, which will be which will go to full council in February of 2022. In particular for this year, there is a planned review of the financial regulations later in the year, and also the procurement rules. So both of those come to you for your comment before they go to full council for approval. And finally, I'm already planning to do an update on the SIPFA Financial Management Code, bring a report to you on that for this year. That code is around making sure there's good process in place for effective financial management within the organisation, and that covers officers, executive members, cabinet, and also the audit committee as well. So that is my introduction to the report. Hopefully it helped in terms of knowing what's coming up for the year, especially for those members new to the committee. And also obviously happy to take any questions or comments in relation to the report.
Okay, thanks, Ian. Councillor Billing, Claire.
I just wanted to ask something about the training that you mentioned and the self-assessment skills, self-assessment. I just wondered how that will be done. Will we get an email or what?
Yes, I will send an email out to you probably tomorrow. So yeah, look out for that. And yeah, if you can complete that as quick as possible, then I can sort of start to arrange some training, and I'll take your guidance in terms of whether that will be face-to-face training at some point, or if we try and do some virtual training. But it will be tailored to what you want and what your needs are.
Thank you.
Okay, any other? Sam Collins.
Yeah, thanks, Keith. Just a point about the members of the committee. I was not both a member and a substitute. I think the substitute's gone a bit awry there. I was a full member of the committee, as it says, but not a substitute for myself.
I'm sure that can be corrected. Claire, did you want to?
Sorry, Sam. Oh, sorry, Councillor Collins. I'll correct that before it becomes a final version for the council.
Okay, thanks. I think we're only asked to consider and comment on the annual report prior to consideration, so I'm not sure that it actually needs a vote on it. So I'm going to move us on to the risk management update on item 9, which again is Ian.
Thank you, Chair. So this report is covering two things really. And this report will be referred on to Cabinet for them to formally approve, but is for you as the Finance Audit and Risk Committee to provide any comments or suggested changes to Cabinet for them to consider when they review it. So the two elements of the report are: one, the latest review of the risks in the last quarter since you last looked at the report as a committee, and there have been two risks that have been reviewed in the last quarter, and they are detailed in paragraph 2.1. They are the cyber risks, and there was quite a long discussion at our risk management group. And just a sort of bit of background, there was a group made up of the executive member for finance and IT, and the deputy member for finance and IT often attends as well. And there's a standing invite to all members of this committee to that meeting as well. And that is also attended by a number of officers from across the organisation who have kind of skills in relation to risk. I am there as risk officer champion, but also our insurance manager is there, health and safety representation there. Mark Chalkley from SIAS attends as well, as do two of the service directors, and that is an opportunity to discuss the risks in quite a lot of detail and really consider whether both the proposals in relation to changes to risk scores, but also to sort of challenge around the controls that are in place, what objectives are in place, and all the detail within the within the kind of risk summaries that you see before you, just to kind of really challenge that. So as part of my email tomorrow, which I'll send you, which will include the training matrix, I'll also let you know when the next risk management group is. And if you'd like to attend, please let me know, and I'll actually get an invite to it. There is a standing invite there for members of the committee to any of those meetings. So after that aside, so yeah, the two risks that have been discussed, so cyber risks, there was a really good discussion in relation to what the target score should be, and also how we get to that target score. And that's sort of set out in the report. That is sort of a summary of that discussion, as well as the appendix, you've got the full details of that risk. But the overall proposal at this stage is there's no change to that risk. And then the other risk that was discussed was the Brexit EU transition risk, and that report detailed the actions and work that has taken place. And if you look at Appendix 1, Appendix B, there's a very full, hopefully, review of that risk and on all the work that's been happening. As you'll note from the recommendation, it is proposed that risk score is reduced, and that hopefully reflects the work that's been done, and also as we move away from all the, hopefully, the Brexit issues and sort of addressing those. The final part of this report is Appendix C, which is the annual report on risk. It's another report that goes to full council, but it's subject to your review first. And it describes what's happened during the year in relation to risk. So describes all the risks that have been considered, all the changes to scores during the year, a brief summary of each of the corporate risks, and also provides a bit more context, including on page 91 in section 7, review of insurance, in section 8 on page 92, a bit on business continuity and business impact, and then in section 9 on page 94, a summary of all the health and safety issues during the year. And all those kind of feed into the kind of overall risk profile of the organisation and those risk activities. And then at the end of that report on page 95 are some actions we plan to take place during the year in relation to risk. So that's a bit of a whiz through that report and the various appendices. Happy to take any comments or questions on that.
Thanks, Ian, very much. Any comments or questions from members? Terry Hone.
Thank you. Yeah, can you explain the medium and high for delivery of the waste collection and street cleansing services contract? Why is that deemed to be risk at this point in time at such a high level?
That's a good question. It's a debate we often have at Risk Management Group. At the moment, it just reflects the size of the contract and the potential impact, but I agree we shouldn't have ongoing impacts of risks at that level. I think it's one that we need to review again. The service is generally operating well, albeit it does have issues from time to time. So I think I accept that challenge, and I think it's something we need to review again through Risk Management Group and then bring it back to here at the right time to really challenge that risk again. Because whilst there are always issues and always can be potential for issues in relation to such a large contract, it's not a place you want to be on a regular basis.
Thank you for that, Chairman. I think, yes, I can understand why the impact of it is significant, and therefore it should be over the right-hand side as far as the impact is. The likelihood, I would have thought, is not medium, but perhaps low, but perhaps I have not a full understanding of the way the contract's being operated, or perhaps I do. And so I think that's a pretty hefty, have it medium likelihood. I don't think it's a medium likelihood. I think it's a very low likelihood because of the way the contract's put together.
Okay, thanks for that.
Yeah, I've got a question. Yeah, I just wanted to ask about the end of furlough and the idea also that evictions are starting to be allowed again. and how that impacts on the risks suffered by the council, lack of income through council tax, extra money requested for benefits and those sorts of things. Where do they come into this risk matrix?
That they would fall into quite a few areas of the risk matrix. So we've got the sort of the general COVID risk, which sort of picks up some of those financial impacts. It's not just about the impact on the council. It also extends more widely, but even looking at the impact on the council, eligibility for council tax reduction scheme, we know has increased during the last year. And whilst we might hope that it won't go up any further, as you point out, with the economic knock-on impacts of furlough ending and businesses really starting to review how they operate in the future, it is possible there could be some more impacts of that. There is also a risk in the matrix around accommodating homeless people, and that's recently been looked at in terms of the risk score there. That was looked at the last meeting, and that risk score was increased to reflect that there is uncertainty there as well. And then there's also a risk on there around the financial sustainability of the council as well, and the ongoing impact on our finances. And that also sort of feeds in from the general economic conditions too, albeit that'll be a longer term issue in terms of what that means for our funding going forward. So I think there's lots of places it falls into. And whilst risks are reviewed regularly, we don't bring all the risks to this committee every time, just to kind of make it a bit more manageable for you as a committee. What we try and do is do a cyclical view of the risks to try and kind of get through them all in a year and give them appropriate focus. But every time a risk is reviewed, which for these corporate risks it is on a monthly basis, if there is a proposal for a significant change in the score, it does come back by default. So please be assured that you will see a review of all those risks, particularly when the scores change.
Okay, thanks, Ian. Any comment? No. Right, Adam.
Thank you, Chair. Hi, Ian. It was just one question from me, and it's all on the section about the work completed for the Brexit piece of work. You've got the e-tendering systems able to transmit to the new government e-procurement system in the event of a no-deal Brexit. Could that just be reworded to say that the e-tendering system transmits to both UK e-notification systems already? Because there's two of them now, not just one, so for high value and low value. That was just it.
I'm happy to talk to the risk owner of that about the detail of it, but yeah, I'm sure you're right. What you will find on those risk matrices is that it reflects the history. So it would have probably been right at the time it was written, but events will have taken over since then. Obviously, in the event of no deal Brexit, then didn't happen. But yeah, we try to tell the story of the risk evolution in those summaries. But I'll make sure it's clear around what that means in terms of what actually happened for the next update.
Thanks, Ian.
Yeah, thanks, Ian. I'm sure a lot of this is an ongoing update, really, isn't it? Any other comments or questions? If not, we've two recommendations in front of us at 2.1 and 2.2 on page 71, which I'll put to you. I'm quite happy to propose that we recommend that from the chair. Somebody care to second? Thank you. So we have a proposer and a seconder, and can we vote on those recommendations, Matthew, please? Thank you very much. That's carried. So we're now going to go on to item 10, which is the revenue budget outturn. And Ian, I'm afraid it's you again.
Thank you, Chair. Sorry, you do get a lot of me in these meetings. So the revenue budget outturn, just a quick recap, is that revenue is distinct from capital in local government finance. So revenue is the day-to-day spending of the council, whereas capital, which will come into the next report, is the purchase and improvement to assets, which are things that have a useful life of more than 1 year. So that's a distinction, 2 pots of money, and therefore 2 different financial monitoring reports to look at them in. So I think it's fair to say that our financial monitoring throughout the last year has unfortunately been heavily dominated by impacts of COVID-19. And this report kind of reflects that in terms of where we ended up at the end of the year. So the position at the end of the year is what will sort of feed into our financial accounts. And then subject to audit, this is what we will end the year on in terms of the amount of money that we've got. And the main one to pay attention to is our general fund balance, which is basically the money we've got to run the council with, plus the income we get in year. But the general fund balance provides some kind of cushion against fluctuations in the amount of income and the amount of expenditure in any one year. So the summary you've got at 1.1 explains that the position at the end of the year is quite a decrease in forecast spend compared to Q3, and that the main reason for that is the position in relation to the support for Stevenage Leisure Limited. They were able to reduce their costs quite well in terms of the cost of running their facilities, and because they had a bit more certainty over when they would be closed towards the end of the year, they were able to maintain the furloughing of staff where they could, and also to really take the pool temperatures down, which helped them save quite a lot of energy costs. So all those are kind of factored into that reduction compared to the maximum level of support that was agreed by full council for last year. In terms of the other changes since Q3, they are all detailed in table 3, starting on page 101. You'll see there's quite a lot of them. I'm not going to go through them in detail, but it's very worth noting that some of the items were underspends, i.e. money wasn't spent, but there's a request that they're carried forward into next year because they're areas to spend where there is a need to still do them. It's just it wasn't possible to do them within the year. For 2 of those, I'm looking at the top of 102. We've got the Strategic Priorities Fund, and that's a pot of money we set aside, relatively small. We spend it, we don't spend it, we don't need to. But it does provide a pot of money to push forward initiatives that might enable us to save money or might allow us to try out doing things in a different way. So the request is to carry that forward, even though only a small amount was spent in last year. And likewise, the apprenticeship scheme, we do have a pot of money, a budget each year that's designed to fund 8 apprentices. There was a sort of a underspend a few years ago, and we're sort of trying to sort of catch up by taking a few more apprentices over that time. So gradually spending the extra money that was underspent in that year, so we get a bit more staff resource, which is particularly helping us out at the moment as we react to and recover from the last year. In relation to the others, hopefully they're all fairly self-explanatory in terms of the explanations, but when I come to the end of the report, obviously happy to take any questions on any of the explanations that are provided. So I'd now like to move on to the other tables throughout the report, which provide a summary of the text. So table 4 is the efficiencies we had in the budget for last year, and some of them haven't been delivered, particularly the one in relation to the interest we earn on our investments. That's our treasury investments. And as we'll come on to in the next report, item 11, you'll see why that's the case. Interest rates have dropped through the floor, and that's the reason for that. Table 5 on page 109 is our corporate financial health indicators. Unfortunately, they were red, and I'm not going to say why, because you're sure you can guess. But this reflects, the problems of income over the last year and collecting money. And then the whole section from 8.8 onwards and going through all the way through to 8.18, and the table in 8.18 relates to the collection fund position. So the council receives most of its money through business rates and council tax. In relation to council tax, it gets to keep what it collects on its behalf. So we collect money for ourselves, for the Police and Crime Commissioner and the County Council. and the money we collect for North Hertfordshire Council we get to keep. In relation to business rates, we collect money on behalf of central government and the county council, but the amount we actually get to keep at the end of all that is very small compared to the amount we collect, with most of it going back to central government, albeit that a good proportion of that actually gets diverted back to other local authorities based on the assessment of need across local authorities in the country. But the money we collect goes to a collection fund for those. So that helps us sort of smooth out the timing differences about when we collect the income and when we sort of get to reflect the income in our accounts. And that's been particularly hit this year, albeit in relation to business rates. A lot of the impact has been smoothed out by both business rate reliefs from central government to a number of businesses who have not had to pay business rates this year, and we get compensatory grant to reflect that. But also, we'll also receive some money from government in relation to the shortfalls we've got on the amount that has remained collectible, and that sort of guarantee in relation to income is also applied to council tax as well. The table in 8.18 just shows the complexity of the timing differences in all of that. So if you look at the bottom of page 111 for council tax, the hit overall is £172,000 impact, but actually we get the money up front and then the impact is spread over 3 years. So it takes quite a long time for the impact to all feed through. In relation to business rates, actually, because at the moment and historically we have been above the baseline level of business rates, and we do budget prudently at a baseline level, we're actually looking like a benefit out of COVID in relation to the amount of money received from the various sources of money. Actually, that doesn't really reflect the reality. We would have probably had a bigger benefit if we hadn't had COVID. It's just that's reduced it, but it's still positive. And also reflects that within there's quite a lot of risk still, and it's sensible to keep that money in reserve, which I'll come into in a minute, to mitigate those against those future risks and potential losses. And then the final table, sorry, the second to last table I'll talk about in detail is table 6, which is the financial impact of COVID-19. So the tables above have sort of talked about all the impacts on our budget, and some of them are specific related to COVID-19. We've done this summary throughout the year, and the net impact overall is about £1.5 million a net impact on our accounts from the impact of COVID-19, and that's after all the compensation from governments. Obviously, the impact would have been far worse without that compensation and grant money, but still quite a big impact we've had to fund from our reserves. But what you will note is that with all the other variances going on and other changes in relation to the collection fund, in table 7, the overall reduction in our general fund balance, it started the year at 9.4 million, ended the year at 8.9 million. It's actually been quite small, but I would point out that some of that is relating to money that will be spent next year in relation to the carry forwards that have been requested. So that all those carry forwards increase the budget next year compared to previous expectations. So some of that money will be spent still, just to be spent next year rather than this year. And then finally, the table 9 is subject to approval by full council, and there's the various transfers to and from reserves. And the one to point out is about halfway down, which is all on page 115, is the MHCLG grants reserve, and the high balance in there, and that is all the business rate money that we're keeping aside, both to pay the deficits that have already taken place, and also the deficits that might still come in relation to the risks of business rate funding going forward. I would hope that some of that money could be released back into general fund at some point, because it is quite a high balance, and I don't think all those risks will come through. But we have to keep it there for now, and look to release it in due course when we're a bit more certain about what business rate funding is going to do going forward. And I'll probably just mention one more table actually. Table 10, it just shows the sheer volume and amount of business grants that have been paid out by the council over the last year. and the phenomenal amount of £46.25 million, of some of which being through quite complex schemes that have been administered by the council, and we have tried to get them out the door as quick as we can to get them domain to businesses so they can sort of keep operating as best they can. So a very brief introduction to the report. We'll wait a while. It's quite a long report, so happy to pick up any other areas or any questions on those.
Thank you, Ian, for that romp through that. That's quite a lot to take in there. I think this is an appropriate time to say how appreciated the work of officers have been in getting the business grants out to businesses so swiftly. I think they've done sterling work, and full credit to them. Comments and questions. Sam Collins.
Thank you, Chair. It's more of a point rather than a question. It's a comment. It's something I'm very pleased to see in the report that it's noted, because the last time we saw this in the report, it wasn't noted quite so clearly. It's on table 6, which is the COVID-19 financial impact on the general fund, that there's an income guarantee from the government that's mentioned there, but actually it's clarified that income guarantee is actually only 75%. It's not an income guarantee, it's 25% short. And that's why there's a bit of a hole in the finances, which is disappointing to see, considering the announcement from the Minister for Local Government in the Houses of Parliament saying that all of the losses as a result of COVID-19 to local authorities would be covered, but clearly it's not the case. So I think it's just worth noting that point.
I would certainly have expected you to have noted that, Sam. Councillor Terry Hone.
Thank you, Chairman. Yeah, a few poses really, perhaps my lack of understanding. So perhaps you can answer that. First of all, page 106, at the very, very bottom there, it says total parking income, 2,039,000 was the working budget, and the outturn was 1,338, and the variance was 60. My variance says a bit more than 60. Or am I misinterpreting that? I'm thinking more of 700 or 699, even 701.
Yes, you're right. It doesn't add up, does it? I will check that out and make sure it adds up.
Okay, yeah.
Make sure that's corrected.
I think, if you put numbers in front of me, I'm going to add them up. Ian, I've been doing that many times. A couple other questions here, if I can, please. Planning application fees, we say we're down versus our budget. At another place, I'm hearing that, and that's not county, I might add, hearing that the number of planning applications in Letchworth are increasing significantly. So I think we can see a turnaround perhaps in the number of planning applications coming through pretty soon. And understand why the car parking fees have gone through the floor. And that was the sort of area which the government said they were not going to cover, was a reduction in car parking fees. That's the same for everybody. If I can go on to page 113, table number 6, when it comes to budget areas, there, waste and recycling, 524. Is that reduction in the AFM, or is it something different there, Ian?
That reflects a number of areas of additional expenditure. One of them being the additional costs of disposal of recycled materials, where the values have been severely hit by COVID-19. Another being the additional processing costs that the contractor put in place at the start of the pandemic. They had to reduce the number of people on the sorting line, sorting the recycled materials, additional cost relation to that. There was an impact on our garden waste income, which is also in there, due to the fact that we had to suspend the service for a short period. And I think there's probably some other little things in there as well, but it's kind of a mixture of things. In relation to alternative financial model, we account for that a year behind. So we will account for the 2021 performance in 21-22, and that is the one where we'll see a big reduction in our AFM, and we've already reflected that in our budget for the coming year because of that big reduction that we expect. In fact, we're probably expecting a very small amount, if anything, to receive for AFM for that period.
Thank you. I don't think that answers my questions, Chairman. Thank you. Thank you.
Okay, thanks. I certainly agree with you on planning applications. Now that ward councillors get notified of planning applications in their ward, I've certainly seen a big uplift in Highbury, for sure. Any other comments or questions from members? No, in which case we have 3 or 4 recommendations, 2.1 to 2.4 recommendations on page 99 to 100. To note the report, to approve the decrease net general fund expenditure, changes to the general fund budget, and the council approves net transfer to earmark reserves as identified. I'm happy to move those recommendations, and Councillor Claire Billing is seconding. Can we have a vote on that, please, Matthew?
Chair.
Yeah.
Those are recommendations to Cabinet. You're asked to sort of comment, provide any comments you wish Cabinet to consider when approving those recommendations. So for this committee, it's around the comments or any information you want to pass to Cabinet when you've considered the report, rather than you approving those yourself.
Okay, so we have nothing to approve then.
No, you can make comments to Cabinet and make proposals,
Okay.
but there's nothing for you to formally approve.
So we will recommend to Cabinet then, yes?
Yes, you recommend to Cabinet that you're happy for them to do all those things, yes.
We are happy. I am happy to, if Cabinet is happy, I am happy. So yes, let's move then that motion. And that's all of us. Thank you very much. Okay, so the penultimate item 10, the revenue budget outturn, and Ian, once more to you.
Item 11, is that okay, Chair? We'll just do
Yeah.
10.
Oh, you've done it all. Sorry.
So it's item 11.
Yeah, indeed.
So yeah, item 11 is the capital budget and the treasury position, or known as the investment strategy. And I think I will start off with the table 1 on page 122, which shows the kind of the chronology of our forecast around capital spend during the year. We started off with a capital budget of just under 9.4 million. That was added to by carry forwards from 1920 into 2020-21, and the proposal at that point was £13.4 million to spend. The impacts of various factors, including COVID-19, has meant that our outturn spend on capital has been 1.8 million, about just under 1.9 million. The biggest factors in that overall have been the money that we've set aside for potential commercial acquisitions and developments to support the district of £8 million, and also money set aside for residential property development. And just it hasn't been the right time for those kind of investments during the last year. So that makes up the lion's share of that balance in return to reduction. Moving on, the table 2 on page 123 is the changes in the position during the last quarter in relation to projects that have moved between years. So this is the latest in terms of slippage from the current year into next year. And then table 3 on page 124 reflects those projects that have been a genuine underspend or overspend. And I suppose the one to point out there is the Disabled Facilities Grant. Whilst on the face of it, a variance of £32,000 on a 50k budget would be exceptionally large. What that doesn't reflect is that most of the money for DFGs sits with the county council, to the pot that they get, but to spend on our behalf on Disabled Facilities Grants in our district, and that budget is £840,000. So in that context, that overspend's a lot less big. So that's kind of the capital side of it. And then but just to highlight, 8.7 refers to capital schemes that were completed during the year. So there was some completed. It wasn't. We did get stuff done during the year. We just around the sort of completing the right things. And then table 4 in 8.8 is how the capital program was funded. And as you'll see, that most of the money came from our capital receipts reserve. But where we can, we always try and get money from Section 106 or other contributions first. That's to sort of reduce the impact on the council funds. And then moving away from capital and into treasury management. Interest rates have just tumbled and plummeted throughout the year. At times we've had a lot of cash. All those business grants we've managed to pay out. The money came in first generally, and then we tried to get it paid out. So we've been sitting on high cash balances. Frequently those have been put back in the what's known as the debt management office with central government, which is a very low risk place to put our money, but also either very little interest, sometimes no interest, and sometimes this year has paid negative interest. We've tried to avoid the times with the negative interest, but we have had to occasionally, just as a place to put our money in accordance with the Treasury strategy. But overall, interest rates, you'll see in paragraph 8.12, average interest rate on new deals has been 0.17%. So that's been really low. The average interest rate's been higher because we had some historic investments that had been placed before the impact of COVID-19. And that was at 0.41%. But the outlook looking forward is that the interest rates will continue to be low, and therefore actually probably expect there will be a further decrease in the amount of interest we generate during the coming year, as is set out in the report there. Whilst we are mindful of interest rates and we want to generate a yield from our investments, we do place security and liquidity above all else. So 8.14 and 8.15 describes what that means. Security means making sure we get the money back. When we put out our spare cash, we want to put it in a place to make sure we get the actual money we put out back and not put anywhere risky. And 8.15 means we've got the money when we need it. So it's around making sure that we can get the money back when we need it. We also do cash flow planning to make sure that we know when we need the cash. So we put it out for the right periods to make sure there's money around. So that's kind of where we are at the moment. What we are looking at doing, and this is covered in paragraph 8.20, is looking at some longer term investments in both a property fund and a multi-asset income fund. And our treasury advisors are in the process of supporting us through identifying some opportunities there about some longer term investments. And that's because we know, looking at our general fund balance, the reserves we've got, provisions we've got, there is an element of core cash that we know will be there for quite some time, irrespective of our capital programme position, that we can invest for a longer period, and that £4 million is a sort of a prudent amount of that to invest for a longer period. And that was approved in the Treasury strategy that was approved by Council in February. So again, probably I suppose also point out that in Appendix B, you've got a much longer update on the Treasury position that goes into a lot of detail. I won't go through that in detail, although I have to take any questions you've got on that report as well as the covering report. So another whistle stop tour through that report, but have to go into more detail on anything anywhere there's any more questions.
Okay, comments or questions? Terry Hone.
Yes, as you expect, a few poses if I can, please. First and foremost, on the capital spend, I think we learnt today or yesterday that the appeal for the crematorium has been turned down by the inspector, and this would mean that probably the council has to take a decision whether it moves forward or whether it ceases its endeavours around the crematorium. No doubt there'll be an impact of that as well if we decide to write off what we've already spent. I couldn't see it in the report here of what that commitment already spend was, because that's part of the capital spend that would go into the total project. So perhaps, Ian, you can let us know what's in here for the crematorium, which may well need to be written off as a result. That's one thing, if I can. The next thing is PWLB, the Public Works Loan Board, we pay about £18,000. How much is still outstanding on the PWLB? If you could, please. And finally, I'm glad to see that as far as investments are concerned, our definition of overseas is still Wales and Scotland rather than anywhere outside of that, because we know the risks of going outside of perhaps our local areas, metaphorically speaking, because that's a strategy which certainly other authorities took in the past and got their fingers well and truly burnt, and we chose not to here in North Hertfordshire for many years, and I see that's continued on here, which pleases me. So, 2 questions: crematorium and PWLB, please.
In relation to the crematorium, we took all of those costs as revenue costs in relation to putting the planning application in. So there's nothing to write off from the capital programme. We would have looked at capitalising them back if we thought there was a prospect of moving forward, but we took the prudent assumption that we would take those revenue to start with and then look to capitalise them later. There's nothing to write back out of the capital programme. In relation to PWLB, if you look at the table on page 139, the principal outstanding as at the 31st of March 2021 was 405,000, and that continues to reflect that it is historic borrowing taken out many years ago. It's just not prudent to pay it back early, so we just keep on paying it back as and when it becomes due. Some of it's an annuity basis, so we're paying back a little bit amount each year. There's a few that are maturity amounts as well, so we'll pay back the lump sum when they become due. I suppose I should just clarify for you, Councillor Hone, that the current Treasury strategy does allow us to invest overseas, albeit we didn't invest overseas during the last year, mainly because of the changes to the credit ratings, both for the various countries you might invest in, and the institutions, but also just the availability of people wanting our money. And there just hasn't been the opportunity to progress those, but the Treasury strategy does allow us to invest overseas, albeit with very strict criteria about what is allowed and what isn't.
Thank you very much. I'm pleased to see that we continue that process of, when it came to crematorium, of putting it into revenue, and then if we did get the project completed, we would then transfer it from revenue to capital, which is what we were doing in the past. We've continued that exercise, which is pleasing. As far as PWLB is concerned, I guess there's still heavy penalties if we pay off that £400,000. There was heavy penalties for early settlement. I guess that's still the case. You don't need to answer that, Ian, because that probably, I can't see why that would change. It's something which we know as part of the arrangement we have with PWLB. So thank you for that.
Thank you. A rhetorical question, wasn't it there then, really? I always love it when financial officers use the word prudent. I think that's very prudent of them. And of course, you're quite right. There are many local authorities across the country who have not invested wisely over the last few years, and we see the results of that. So, right. Now, I notice on the are there any other comments or questions? No. I note the recommendations, Ian, are all really for Cabinet. So presumably, do we have to vote on this?
Yes, Chair.
Yeah, just looking to confirm that you are looking to refer something to the Cabinet with no comments.
Okay, so then I'm moving that we pass this on to Cabinet. So, from vote on that. And that's approved. Thank you very much. Right, we now need to look at possible agenda items for future meetings. It says chair to lead a discussion, but I'm looking to all of you who have the experience of some of this in the past for regarding possible agenda items. And I do take the point that we need to be careful that there's not too much overlap with overview and scrutiny, because that's would be just duplication of effort there. So are there any possible agenda items? And Ian, if you've got anything to come in on that, I'd be desperately grateful.
I suppose, as I highlighted earlier, there is a potential to look at the financial management code, and do sort of has been sent to this committee before, but maybe a refresh about where we've got to with that and the actions we've taken to try and improve how we monitor and manage our finances.
Well, that seems a good starting point. And as some of us are very new to this, I'm sure topics will evolve as we move through the year that we'd like to get more information on. But other than that,
Chairman, I think that sooner or later we're going to have another look at what it cost us, what COVID cost us, and actually did cost us, and what we spent, what income we did not, what we lost income, because that's a big number in there, particularly around parking charge. I use that as an example, and other areas where which would not have happened had it not been for COVID. And look at then we can also look at the point, Councillor Collins, which is how much we got back from government, and therefore what our gap is, so that we can know what that gap represents in terms of what it was for, and whether or not it was something which we would expect it to be covered, or whether something which was never going to be recovered. So I think sooner or later we've got to look at that. I'm not terribly sure when, Chairman, but it's probably a bit way down the road. But I'd like to think that sooner or later we're going to go through that process.
and yes, I would agree with that, and I'm sure we will. But I'm like you, I don't think we're ready to do the balance sheet quite yet. Who knows what this year will bring? But certainly towards the end of this year, I would have thought we should be looking more closely at what the impact has been on us financially. So maybe we can pencil that in, Ian, for the end of the year. Okay, any other points? In which case, I will close the meeting, because we have another one on the 12th of July, by which time you may all have wonderful ideas that you'd like to know more about. But here we are at whatever it is, 8:42. I will declare the meeting closed, and thank you all very much.
The live stream has ended.
Thank you, Lewis.